Howdy doody, everybody. We'll be getting rolling here in just a second. All right, everybody, welcome. Good to see you here. We are going to get the show on the road today. As I mentioned, we're going to do a couple of things in today's live stream. The first thing that we're going to cover is a presentation that I put together on how I think pilots can make a lot more wealth by doing something more than just flying airplanes. And that is using some of that large salary that you earn to invest in commercial real estate. And that's something I've been doing now for 4 or 5 years. And it's been the most profitable thing that I've ever done. So that's what the Invest with Trent channel is all about. The new one, if you're not yet a subscriber, you're going to want to head over to that and become a subscriber. You can visit the Invest with Trent website and join the email list if you would like. And then you'll get email notifications of this, of live streams like this and future ones. So let's dive into this plan that I have developed that I want to share with you for how over a 10-year period of time, I think it's pretty realistic for for someone to actually build that level of net worth. So this is my first live stream, by the way, so there's going to be all sorts of mistakes that I'm making, I'm sure. So we have got to pull up a presentation. So just bear with me while I do this. Okay, so there we go. And now let's see if we can't share that on the screen with you. All right, is this working? Let me check. Yep, it's working. Okay. So the flight plan to $6 million of net worth. How's that work anyway? How can you... Oh, welcome, by the way. If you would like to say hello, I see we've got a couple people here now. This is my very first live stream. It's not something that I typically do. But if you could help me out, put a comment down below. I want to see if the comments thing is working properly. It should roll up or scroll up the comment or pop the comment onto the bottom of the screen. And then I can look and see. This is a placeholder comment when I designed all this stuff yesterday. So I'm really not sure how all of this stuff works yet. I'm going to get better at live streaming over time because I'm going to be doing these every week. But nonetheless, if you could put a comment there, and then I'll try and figure out how I can see them, because right now I honestly don't have a clue. I don't even know why the live stream's not showing up here. So we will get that all figured out. In particular, you should be able to see the presentation here that I'm about to show. So if you can, again, just even after the fact, just leave a comment down under the live stream if you can see it. Because like I say, this is a total experiment for me, and I'm sure I'm doing all sorts of stuff wrong. Nonetheless, let's get the show on the road. So your flight plan to $6 million, an accelerated 10-year wealth strategy for airline pilots through commercial real estate investing. So obviously, if you're already a captain, you're making really good money. If you're at a major, you're probably making $400,000 or $500,000 a year. Even that over a 10-year period of time is $4 to $5 million. So to do more than that would be significantly feasible. But what if you're just a first officer just starting out? What if you're only making $100,000 a year? Well, what does that look like? So the unfair advantage in building your wealth is you've got to make sure that you live well below your means and that you learn how, and I'm going to teach you how, to invest in commercial real estate. And it's really not as hard as you would think. There was, if you've watched my origin story, you'll know that back in 2019, I had zero experience. And I bought a building. And boy, oh boy, did it ever go well. And if you want to learn more about that particular story, you can go to the Invest with Trent channel. There's a video there where I explain pretty much everything and I run through the numbers of the building and so forth. So let's talk about your accelerated 10-year, and we're going to dive a little deeper into the weeds after this, but for now, I'm just kind of giving you the big picture overview. So you want to, phase one is build the foundation of your first major acquisition. Now, ideally, sure, if you can save up some money or you have some money, that's going to help a bunch. But you don't have to have buckets of cash to start investing in commercial real estate. For example, if, like in our case, what we did, we actually needed some of the space. Now, as a pilot, you may not need the space. But we were able to get an SBA loan, which meant that we only had to put 10% down. That was one way of reducing the upfront cash. Another way is to form what's called a general partner, limited partner relationship. So let's say that you're someone who knows people and you know people that like to invest in real estate. Well, you can structure your deal such that the equity, which is the down payment, actually comes from equity investors. And you can do a small deal, do $1 million deal. Then you probably only need $200,000 of equity. That's 4 people at $50,000 a pop. And lots of people have $50,000. And with the new Trump administration's executive order from, I think, yesterday or the day before, where over the next 6 months, they want to switch it around so assets like this can be held in 401ks. So that's not a foregone conclusion, but they definitely want to push in that direction. Lots of people have $50,000 in a 401k. So that's another way of getting into real estate. Now, a third way, which I've also done very profitably, is to start as someone else's limited partner. So you find a general partner and they're offering limited partner shares. So you can start off with, some companies don't have a minimum. My first deal was $25,000. It worked out incredibly well because what we did, or what the general partner did, was he raised equity from people like me. He went and bought a mobile home park that was in not very well run. So lots of room for optimization and then stabilization. And about 3 years into, so we were getting, 7 or 8% on our money, paid quarterly through distributions on that $25,000 for the first 3 years. So we weren't shooting the lights out by any stretch, but then the magic happened. Because they increased the cash flow, which is how commercial real estate is valued. It's a function of cash flow. The value of the asset went up substantially, because if you're looking at a 6 or 7% cap rate, and cap rate, by the way, is just how much cash the building throws off. So if you bought $1 million building and it throws off $60,000 a year in cash, that's a 6% cap rate. So by increasing rents and increasing occupancy and decreasing expenses, the value of the asset went up significantly to the point where the general partner, in this case, a guy by the name of Corey, was able to do a cash out refi. So the bank recognizes the asset as a higher value. They then refinance the asset, got 80% of the money back. So I got a check for 80% of my money back. So my yield went from, say, I think it was 6% to like 70% because I'm still getting the same quarterly distribution as though 100% of my cash is invested. But now I only got, like 20% of my 25,000 invested. So what's that, like $5,000? So now I've got a $5,000 of cash still invested, which I'll get someday back when they sell the thing. And then I'm getting these distributions. And so what do you think I did with all the extra cash that I got back? I reinvested it in another deal. And you can just keep doing that over and over again. And that's what I call mailbox money, because you as the limited partner, you don't have to do anything, like literally nothing. Everything is done by the general partner. Your only job is to find general partners that you feel as though they align with an investment strategy that fits with you. And we're going to talk about investment strategy and buy boxes and stuff in future videos. So again, make sure that you become a subscriber if you don't want to miss that stuff. But you just got to make sure that you find a general partner that has the right track record and that you believe that you can trust, and their investment philosophy is aligned with yours. So that's the limited partner approach. Now, if you want to be your own general partner, which is the most profitable by far, is you're going to need to start saving or getting equity from other people. You're going to need to educate yourself, obviously, on commercial real estate markets and asset types. And I'm going to talk about all this stuff in future videos. And then the key is the mindset shift from being a passive investor to an active investor. So what do I mean by that? All right, here, begin networking with brokers, lenders, and potential investment partners. What does that actually mean? So unlike buying houses as an investment, which I think are horrible investments because they don't have any of the benefits of commercial real estate, they're all listed on the MLS predominantly. Yeah, you can buy off market, but most people really don't. They just go to the MLS, they look for a cash flowing market, and then they compete against everybody else for those deals. And the person who's willing to pay the highest price wins. Pretty crappy way to do it, in my opinion. But commercial real estate, it doesn't work that way. I mean, there's Crexi and there's LoopNet, but you're only going to see the crap that nobody wanted to buy on those marketplaces. So if you're a passive investor and you've got searches going, you are never going to find a cash flowing deal. Instead, what you need to do is figure out, well, what's my buy box? What is it that I want to buy? What does it look like? And again, we're going to talk more about buy box in future videos, but it's just the definition of your investment criteria. What type of building, what price range, where is it located? Do you want a fix-up building or do you want one that's fully occupied? All of these things you have to take into consideration based upon what type of investor you are. And then once you understand what that buy box is, you're going to network your tail off. You're going to be talking to as many brokers as you can. You're going to be building relationships with those brokers. You're going to be building relationships with tax advisors who maybe have clients who are selling stuff. You're going to be building relationships with all sorts of people. And that's going to create your deal flow for you. And then you're going to have the opportunity to find these cash flowing deals. And that's the biggest roadblock to new people is they're not willing to, first of all, they don't understand that, number one. And then number two, they're not willing to put in the legwork to make all of that happen. So this is where hustle comes into play. You got to hustle. So now phase two, years 3 and 4. I mean, I don't think that you should take 3 to 4 years. I think more realistically, you should take 3 to 4 months. In my case, the first deal, I was working with a broker to try and lease space for my company. And I said to him one day, I'd really like to buy a building rather than lease space. And like a day later, he calls me up. He said, hey, I just got this pocket listing, and that means it's not on the market yet. Do you want to see it? I said, well, yeah, absolutely. So we went and saw it, and we wrote an offer that day. So before it was ever on any marketplace anywhere where other people could see it, I already had the building under contract. And obviously that worked out very well for us. So I recommend, now there's a lot of different types of commercial real estate. I don't do office. I don't do a lot of things. The things I'm interested in are assets that do not require significant investment every time the tenant turns over. So multi-tenant light industrial buildings, they're perfect. They're all a workshop, an office, and a big roll-up door. From one tenant to another, you're not going to have to spend any money moving walls around. Like if you buy office, every new office tenant wants walls moved, and that's a whole bunch of money you need to spend. Self-storage is great because you don't even need brokers to bring you new tenants. You literally just build a marketing system and you're renting out a box and you're not making any changes to that box from tenant to tenant to tenant. And then manufactured home communities, the beauty of those things is you're just owning the dirt. So leaky toilets and leaky roofs and all that stuff's not your problem. And that's one of the reasons why I really like mobile home communities, because dirt is pretty simple and your tenants are going to stay for a really long time, AKA forever, because it costs a ridiculous amount of money to move their trailer, which isn't really that mobile, to be honest with you. A new, nice manufactured home, it's not sitting on wheels. It's sitting on a concrete pad. So you're talking big money to move it, so people don't move it. And so these are my favorites. And so the strategy, if you don't have a lot of money, you can be a limited partner, or you can find limited partners for yourself and be the general partner. Now, in the beginning, when you don't know what the heck you're doing, you might want to either work with someone who's done it before and be a partner with them so that you can get the learning experience, or focus on limited partnerships and just really pay attention to what's going on so that a year or two down the road, you can talk from a place of knowledge to potential investors who might become in your deals. So now years 5 to 7, we've got the snowball. So you're going to accelerate and diversify cash flow from equity from your first property. So when that refi comes, you're going to use that money to buy another property and another property and another property. You get the idea. And you're increasing pilot salary. You know, who spends, if you're making $400,000 a year as a captain, who spends all that money? Like, I mean, sure, some of them do, but that's crazy. So you're going to have substantial investable capital every year. And then focus on value-added opportunities. So the first building that we bought was very clearly a value-added opportunity because it was a pile of junk when we bought it. It was the previous owner had inherited the building because somebody owed him money and didn't pay. And so he didn't do anything. He didn't do any management. All the tenants were on month-to-month leases. They were all paying well below market. They weren't proper triple net leases, which is something I'll talk about in a future video. But basically, triple net lease puts all the responsibility for taxes and maintenance and so forth on a tenant, not on you. So that makes your life a whole lot easier. And then you go, like what we did is we went and fixed all this stuff. We raised rents. All the tenants moved out because they got pissed off because they didn't like their rent being raised. So we found new tenants. We structured triple net leases. We worked with brokers to bring us tenants. Those brokers received commissions for doing that. The building needed some walls moved around because it was a really janky design. Like there was bathrooms that were being shared among 3 units. So we put a bathroom in every single unit. We straightened out the walls, basically brought the building, it's called stabilize. We stabilized the building. So we had it 100% occupied. We had steady cash flow. We had now positive passive cash flow of about $2,000 a month on the building. And to no great surprise, it went way up in value from the 1.3 that we paid for it to $2 million. And 2 years after we bought it, we sold it for $2 million because someone approached us and said, hey, I want to pay you $2 million for your building. And not knowing any better, not knowing many of the things that I know now, we sold it. And in hindsight, probably would have been a better idea from a long-term wealth building strategy to refinance it, take the equity out, still own that building, still have the pay down of the mortgage through the tenants, and then allow us to repeat over and over again. So now we're going to aggressive scaling. So you're going to do, every time you want to sell a building, if you want to pay taxes, you can do what's called a 1031 exchange. You may transition from being a passive partner in these limited partnerships that I've talked about to leading your own investment groups, earning acquisition. I mean, there's just so much opportunity for you. You're really only limited by your ambition, your hustle, your desire for growth, and so forth. So that's kind of a high level. I would love it if you would leave me a comment in the comments about what you thought of that. And now let's look at what we're going to talk about next. All right, so we covered that. All right. So now we're going to talk about how I am leveraging AI. So another thing that I really, really love, and I use it in all of my businesses, is AI. And so I think I should be able to share my screen for this. I've just got to figure out how to do this here. So let me see if I've got something already set up. Oh, hang on. Before we move on, we are going to turn that off and turn that off. And I don't think I actually need to go through this one. Let me just see. No, I mean, I think I pretty much just covered all of this. A couple of things I do want to touch on is, well, let's just talk a little bit about multi-tenant light industrial, because that's one of my favorite asset classes. So it's basically one of those properties where you see it's divided into multiple units. They're typically leased to small business. A lot of times they're going to have a roll-up door, a small office space, and some industrial room to do whatever. We had transmission shops, we had motorcycle repair shops, we had places that did stuff with granite countertops, whatever. It's really, really common stuff. And so if you had, in our case, we had a 7-unit building. So if a tenant turned over, it really wasn't that big of a deal because it was only 1/7 of the rent. So key advantages of that is multiple tenants to reduce vacancy risk, lower maintenance costs, because as I mentioned, you're really not doing much between tenants. E-commerce growth is driving a lot of demand in this space because there's a lot of people who are, selling stuff on Shopify, and they have businesses that are inventory intense, and these spaces are absolutely perfect for that. And so typical returns are usually cap rates of 5 to 7% plus whatever appreciation. And so, why does that work for a pilot? Well, it's stable, it's long-term income. You've got these triple net leases, which I mentioned, which are really just kind of mailbox money for you because maintenance and taxes and all that stuff is it's your tenant's responsibility, not yours. So you're not going to have a whole lot of management headaches. Whereas let's say you have a portfolio of 5 or 10 residential properties, you're going to have all sorts of headaches. People are moving in, people are not paying rent, people are breaking stuff, hot water tanks are leaking. All that is on you. And more than likely, and this is really one of the reasons why I don't like residential, you're getting zero positive cash flow while you own this thing. So you're having to do all this work for basically no pay, and that sucks. And then you've got self-storage, my second favorite, I don't really rank them. They're all just my favorite. I haven't personally invested in self-storage yet, but I absolutely plan to. One of the things that I quite like about it, aside from the fact that, it's a really simple business, all of these are a simple business, is that it's recession resistant. So if the economy weakens and AI causes job losses and all sorts of stuff, and we've got lots of uncertainty now, as I'm sure you know, people are going to downsize to lower their costs of living. And they're not necessarily going to want to get rid of all their stuff because all of their stuff is only going to be worth 10 cents on the dollar. And they're probably going to want to have it for later when they can upsize again. So they're going to pay to store it somewhere. And the more people downsize into smaller homes, the more they're going to need storage for their stuff. So a typical return, 6 to 8% cash on cash annually. Then same thing, you're going to increase the utilization of these things or the occupancy rate. You're going to put in automation to lower your expenses. You're going to improve services to make it more desirable. And you're going to increase the cash flow, and then it's going to go up in value. And then finally, mobile home communities. I kind of covered those already, why I really like them. So step by step to get started as a pilot investor, find some investment groups to join in. Ideally, through your networking, you'll find 3, 4, 5 people that maybe even want to be in a WhatsApp group. And then you just use that WhatsApp group to be trading ideas and talking so that everyone is teaching everyone. And that's going to build your knowledge base. And then you're going to, source your money somewhere from your 401k or from your cash or whatever. And you can start small and then begin, like I mentioned earlier, if you're a limited partner, you could be just $25,000. Or if you are someone who maybe got your WhatsApp group, you got 3 or 4 of you, and you just all go in on a syndication together, and voila, that's where the money's going to come from. So challenges, time to market. As a pilot, you have something of an irregular schedule, but that's okay because honestly, like in the 2 years we owned our building as a general partner, I think my wife who ran the building, it was like 3 or 4 hours a week, honestly. And that was to fix a building that really was in rough shape and needed all sorts of things fixed and tenants turned over and so forth. But it's just not that hard. There's not that much work to do. And when we went into this, we had a knowledge gap. We didn't know anything about any of this stuff, but we just figured it out along the way. We would ask our broker, we would just figure it out. So there are some risks. Of course, everything has risks. There's economic uncertainty. If the economy really goes into the dumper, some of those small businesses might not be able to afford to stay, but that's why you want to have a good product. You want to make sure you have a nice building in a nice location. Maybe there's a couple of premium features. All of this stuff you can learn how to do, and then you'll be in good shape. So take control of your financial destiny, allocate savings, deploy capital, build cash flow, reinvest and scale. All not, particularly complicated stuff. Okie dokie. So now, by the way, I'm not seeing comments on here, which is, let me see if there's a way for me to turn on. Oh, there we go. Comments. Oh, cool. Now I can see comments. So Chris says, I've worked in self-storage for 13 years on the management side as president of a company. Self-storage is one of the best real estate investments, is advancing quickly in technology. Absolutely. So Chris asked, how do you account for capital improvements on the long-term holds after the refi or large repairs live payment? So if you're the general partner and you're doing a refi, like the general partner that I do, Chris, he has a reserve fund, and that reserve fund money is being put into that all the time. So anytime stuff breaks, like in one of the mobile home parks that we're an owner in, the whole sewage, everything system just, there was some stuff they didn't catch in due diligence. And so because he'd factored in a reserve fund, there was no capital call to the limited partners. So I didn't have to put any more money in the deal. They had enough money in the reserve fund to fix everything. And so that's how it went. All right. So now we're going to make a shift. So viewer name here. Again, I'm just learning how to do all this stuff for the first time on these live streams. So I want to show you guys how I am leveraging AI this week. So let's see if I can find the right scene, because it can be incredibly helpful. So I'm going to see if I can, that's not the view I want. Let's do presentation, and let's see if we can, let's go to this one. And what if I put a screen share on there? Here we go. Okay, so now let's switch over. So I use a couple of different AI tools. My favorites are Claude and ChatGPT. So let's start with ChatGPT. How you guys liking this so far, by the way? Again, leave me a comment if you would. That'd be great. So in ChatGPT, which is now on version 5, which is pretty cool, and I have the paid ones, like $20 a month or whatever it is. The first thing I recommend that you do is you create projects. So you can see I have Fly with Trent, Invest with Trent, and so forth. So let's look at Invest with Trent. I want to figure out, what does it look like? Like, if I have a goal that I want to accomplish, what does that look like? How do I do that? And how do I get AI to help me figure that out? So the first thing you do is when you create a project is you create a set of instructions. This is so this project is about my journey from someone who's made a single very successful commercial real estate investment as a general partner. I made a number of them as a limited partner, to someone who's acquiring 3 to 4 buildings per year. I'm a solo investor at this point, but over time, the goal is to attract other accredited investors to help me fund my deals. A big part of the business plan is going to be to share my journey on YouTube and how I'm combining the use of AI plus investing in commercial real estate to achieve my goals so that I can attract a large audience of highly engaged followers who will watch my videos and also want to invest in my deals. Now I'm going to this is what I call kind of a master prompt. And this is a really simple version of a master prompt. Master prompts can get a whole lot more complex. Like, let me just show you. We'll use Claude. Something I was thinking of doing at one point in time was a car club, but I decided against it. It was going to be a really great system for networking and finding other investors. And I like cars. So in Claude, this here is what's called the master prompt. And it talks all about the business that you want to build. And then when you've done that, so if we go and look at Exotic Car Club, you can literally just say, and this is one of the reasons I decided not to go ahead. I prompted it. All I said was, I wanted an AI business plan. or AI risk management analysis. I don't know why it doesn't show me the prompt. But in any case, it did a phenomenal job of giving me an answer to all of the risks that I was going to be exposed to if I undertook that project. And honestly, it was all of these risks that made me think, no, I don't want to do that. So in ChatGPT, near as I can tell, that instead of in the settings section of Claude, and you can change your master prompt from one business to another, and then you can start asking it questions, and it'll always go back to that master prompt. In ChatGPT, I just put that in the instructions as I showed you here. And then I start talking about, I just start prompting it and asking it things. So the first thing that I did was I just said something simple. I want an AI business plan give me an AI business plan that will allow me to earn at least $100,000 either in cash or increased equity over the next 12 months. Like, that seems like a reasonable goal, right? I see we've got more people. Welcome everybody. Please leave me a comment or something down below just to let me, this is my first live stream. I need feedback on this to make sure that it's, showing on the screen properly and you're enjoying it and I'm not going too fast and too slow and what have you. Let me see if there's any more comments. Brandon, love it. Thanks for taking the time to do this. I've learned a lot from your other content and you're a part of the reason I decided to become a pilot. That's cool, Brandon. Thank you so much. I really love hearing how my content is helping people to overcome challenges and make progress in their career. There's just nothing that lights me up more than that. So let's have a look at this prompt. So business model, and this is, the robot, I just call AI the robot. This is the thing that I find so amazing about this stuff is how good it is and how fast it is. Long this would have taken me to do without AI. Anything I would have done would have never been as good as this because I'm just not that thorough of a guy when it comes to research. It's not my favorite thing to do. So overview, AI-driven commercial real estate deal sourcing plus content monetization. So the goal is to acquire 1 to 2 cash flowing or value-added properties in the $1 to $3 million range within 12 months, funded with partner capital, while monetizing my AI plus real estate journey online. Well, that sounds pretty good. That's a nice goal. I like that. So revenue streams, increased equity from the deals that I source and become a GP in other words, from the buildings that I buy. And I think in the next year, I could buy 2 buildings. And then I've got cash income from all sorts of places, content monetization. I'm going to offer consulting for other business owners. That's my niche, business owners, because there's a lot of ways for them to save tons of money on taxes by investing in real estate. And they won't understand that, and they'll see my content, and some of those people will want to book calls with me, and I'll charge, $1,000 an hour or whatever for those calls, and people will pay because they'll see the ROI. They'll see through my content and through the things that I've done, they'll be like, wow, this guy really knows what he's doing. And I'm going to pay him $1,000 for an hour of his time because I think I'm going to learn enough to be able to start getting going. And then if I get going over the next year, 2 years, 3 years, I'm going to make way more than $1,000. And then also AI-powered lead generation services for other investors. So you're going to hear me. I did a LinkedIn post today where I talked about the mindset shift that was needed. As a matter of fact, we can go back and look at that mindset shift because, and I'm a little off topic here, but that's okay. It was this post here. And if your deal pipeline starts and ends with LoopNet, you don't have a deal pipeline. I mentioned this earlier. You have to be a deal hunter. They're not going to come to you. So a big part of being able to do, let's get back to, where's the prompt I was just on? There we go. Then back to the business plan. So a big part of making this happen is that mindset shift. You've got to understand that you're going to have to get out there and hustle. But as a pilot, you're not working 40 hours a week. You're working less. So with discipline, scheduling, and some smart strategies, which you can ask AI to help you do, it's all possible if you want it bad enough. So why does this work for $100,000 profit? And, like, wouldn't you be happy if in the next year you made an extra $100,000 by investing in commercial real estate? Like, that'd be a pretty phenomenal outcome for most people. So AI can shorten the deal finding time. You'll target off-market light industrial, self-storage, and mobile home parks within 4 to 5 hours of Boise, where I live. My equity is going to come from sweat, not cash. So as the GP, I'm going to bring the deal. I'm going to be the guy that knows how to find these deals. I'm going to build the systems. I'm going to do all the networking. And then, because I don't have an unlimited supply of money, the investors are going to bring the money and they're going to get a slice of the equity and that preferred return of the 6 to 8% per year. And I guarantee you, your investors, and you don't have to be a social media whiz to do this. You can do this through word of mouth. And then when they're happy, they're going to reinvest and they're going to tell other people about you. And eventually you're going to get at a point where you have more investors than you have deals, and you can just keep acquiring and acquiring and acquiring. And then in my case, because I'm a content creator and I love to do that, the content that I create is going to build credibility for me like it did in the flying niche. And that's going to build followers. And some of those followers will be accredited investors. And I'll have funnels and lead flow on my website to capture those leads and have those conversations. And some of those people are going to turn into be investors. So here's the AI step-by-step plan. So first of all, we want to build an AI deal sourcing machine. And it says it's going to take 1 to 2 months. And these are the tools that I'm going to use. This is going to be the process. I'm going to identify 10,000 target properties. How am I going to do that? I'm going to ask AI how to do that. Then I'm going to use AI to enrich the data. How am I going to do that? I'm going to ask AI to give me detailed step-by-step instructions on that. And then I'm going to ask the AI to give me step-by-step instructions for number 3. And then I'm going to build a system for number 4. And the goal is 10 qualified off-market leads per month. So these are deals that I'm going to do quick bits of underwriting on to see, does this make sense? Is this worth exploring further? And some of them are, because again, you're not competing in commercial real estate, unlike residential real estate. You're not competing against gazillions of people for a deal because there's just not that many people buying small deals in the $1 to $3 million range. Like on the building that we bought, there was no other bidder. We were it. And because for the big investors, $1 to $3 million, the deal's not big enough. They don't want to do it. But you can make tons of money. As I mentioned in my video, we made in 2 years, the building went from 1.3 million to 2 million. Yeah, we had some expenses and selling costs and so forth, but still, trust me, it was a pretty handsome profit after those first 2 years. So that's step 1. And now step 2 is lock up 1 to 2 deals with partner capital, and that'll be somewhere in the 3 to 8 month range. So you're going to do this. You're going to take 20 to 35% GP equity for sourcing and for doing the due diligence and for the management. So an example of that on a $2 million light industrial property where you need 25% down to buy it, your GP share is going to be $125,000 and the rest is going to come from your investors. Now, if you don't have $125,000, then you're going to have to figure out something different. You're going to have to figure out how to get more money from investors. And as we did, I recommend that you, or that the AI recommends that because this is for me, focus on value-added plays. So tenant turnover, rent increases, small CapEx improvements. This is exactly what we did on our first deal. And those are the reasons why the deal went up so much in value. Then when you're buying the thing, maybe the seller doesn't want to pay a huge tax bill. Maybe they don't want a 1031 in exchange into another building. So instead of using a bank to finance it, if the current owners owned it for 20 or 30 years, the thing's probably paid off. You can get them to be the bank. And that can go a long way to creating a deal that, you need minimal down payment. Because depending upon the rapport and relationship you build with that seller, they may be willing to take, a pretty minimal amount of money down. It all comes down to what you can negotiate with the seller. In my case here, I'm going to monetize the journey via content. So if you're not a creator, well, skip that step, but I am a creator. So these are some of the things I want to do. I want to make the channel grow. I want to make sure that I'm doing lots of posts and lots of content every week. Some of the tools that I might use. Now, I have a channel manager that manages my stuff, so I'm personally not using any of that stuff, but I'm sure he does. And then I have to, come up with a subscriber goal. And AdSense, I'm not so worried about because I have lots of other ways to monetize. AdSense is the least important, and it's like, for example, with Fly with Trend, it's the least profitable revenue stream. So, is that an important goal? Not really. But if that was an important goal to you, again, I would ask AI, how do I go from 0 to 10,000 subs? And guess what? It's going to give you a really great action plan. So number 4 can be, this is where the money is. If you're a content creator, you're going to offer paid offerings like I do with Fly with Trent. I have CFI referrals. I have training courses on my website. People can put consulting calls with me. And over the last year, that was not an insignificant sum of money, especially given how little work it took me to be able to do that, because I had systems for everything. So I could really run the channel in less than 4 hours per week. So the ROI on my time was ridiculous. In the real estate space, I could have masterminds. I could have these consulting calls. I could have training courses. There's all sorts of ways that you can take that audience that you're building. And I recommend everyone build an audience. Now, let's just talk about that for a minute, because some of you who've never built an audience before might be thinking, well, why would I do that? I'm not an expert at investing yet. And the thing is, you don't need to be. Think back to the beginning of Fly with Trent. I wasn't an expert at anything. I put up a video that said, is 53 too old to become an airline pilot? And as luck would have it, a lot of people were asking themselves that question. So that video got a lot of views. And so then I put up my plan. I made this big, bold claim of what I wanted to accomplish. I hadn't accomplished anything, but that video got watched hundreds of thousands of times in the first couple of weeks, because thanks to the first video, YouTube had identified the audience that would be interested in that. And people loved that big, bold claim. They were the naysayers, of course, who said I was an idiot, and I proved them all wrong. So I was laughing all the way to the bank on that. But there was other people who were cheerleaders. You probably are one of them if you're on this live stream with me now. And they wanted to see how the story unfolded. So I became the expert over time by sharing the details of the journey, because I sure as heck wasn't an expert in the beginning because I hadn't accomplished the goal yet. But once I'd accomplished the goal of getting there faster than probably anybody in history and spending a lot less money than most people, guess what? They all saw me as the expert. And that's why my training products and I get all that back end monetization, because people want to tap into the knowledge that I accumulated over the 2 years that allowed me to accomplish that goal. Then there's affiliate deals and high ticket coaching. I mean, there's all sorts of stuff that you can do. And then number 5 is exit or refinance for cash. So on at least one of the acquired deals in month 9 to 12, that might be a bit quick, but you're going to complete a value added work and refinance or sell to unlock GP equity. I think 1 year is probably, I'm going to call this a little flaw in the plan. I think 1 year is a little quick. We did it in 2 years. So I'm not saying 1 year is impossible, but here's an example. You buy a $2 million property, you make it worth $2.4 million, and you'd be surprised how little you have to do to be able to do that, because this is all a function of cash flow. So what's that? That's a 20% increase in value. 2 times 2 is 4, yeah. So you need to increase our cash flow 20%. We did that when all the tenants turned over and we raised rent to market rate. We actually increased our cash flow 30% or 33 or 34%. And that it took a while, because it took a while for the tenants to turn over, but nonetheless, we were able to accomplish it. So then you get another 70% LTV loan and you refi it. And now you have a $1.68 million loan. And if the old loan plus costs equal 1.4 million, you just unlocked $280,000 in equity, and your share as the GP is you made $70,000 in cash. Now you got a check for $70,000 after a year or two. In this case, the plan is designed to be for 1 year. Well, that's not an insignificant sum of money for a lot of people. So 12-month financial target, GP equity in 1 to 2 properties, coaching, YouTube AdSense affiliate, and there's the total earnings potential, 105 to 210. So what do the key success factors look like? Speed to the first deal, consistency in content, and automation and delegation. So now let's say, you know what? I want to break this down a bit. I want to ask the robot so I work in a 12-week sprint cycle. I treat each 12 weeks like it is a year. And so there's actually a book out there called The 12-Week Year. And I would encourage you. And you got to be really organized and really disciplined with your time. Now, to do this, I have what's called a finisher's journal. It's actually a paper book. And it basically allows you to break down your business into 12-week periods of time. So why is that important versus the year? Well, a lot of times when you have a 1-year plan, you get complacent and you get lazy because you're like, well, I'm behind in the first quarter, but I'll make it up in the second quarter. And then in the second quarter, you're even further behind, but you're like, oh, I'll make it up in the third quarter. Third quarter, you're even further behind and you say, oh, I'll make it up in the fourth quarter. And then you got to work your tail off in the fourth quarter to make your numbers. So I don't like that approach. I want to make sure that I make my numbers in the first 12 weeks for whatever it is that I need to accomplish in the 12 weeks. So I work in a 12-week sprint cycle. Give me the detailed action plan for the first 12 weeks. Ideally, I would like to have my first building at least under contract, not closed. I don't own it yet, but under contract. So let's see what that looks like and watch the power of AI. This is so cool. Yep, that's what I want. So here we go. 12-week sprint, AI powered. Have your first building under contract. So this is what I need to do. I need to find a list of 2,500 properties. AI will help me do that. I need to develop a system where I reach out to 500 of those owners. Totally doable. AI will instruct me on doing that, and I'll make that happen. I need to talk to, in person, ideally, at least 15 of those owners. I need to submit 3 LOIs, which is letter of intent. And out of those 3 LOIs, ideally, I get a property under contract. So that's the main KPIs that we would be judged by, or that I would be judged by over the first 12 weeks. So phase 1, weeks 1 to 3, build the machine. So asset targeting and market mapping. So we're going to define a buy box. We're going to pull target property list from all these different places. We're going to use ChatGPT to generate personalized outreach templates. We're going to, for the deliverables, we want a spreadsheet of 1,000 properties that fit in my buy box. And then I'm going to have an outreach script. And all of that stuff is doable. There's nothing there that's really that hard to do. And especially if you don't know how to do it, you just ask AI for more details on how you do that. Week number 2. So like you could accomplish that in a week. If you want this stuff bad enough and you are willing, like even if you're employed full time, maybe it takes you 2 weeks to do that. But at least you know what you need to accomplish, which is the key. You've got to have clearly defined action steps. In my case, I do this full time because I'm not flying right now because I'm grounded. So aside from making YouTube videos, this is going to be where all my time and focus goes. So number 2, data enrichment and CRM setup. I actually just signed up for some software last night called Go High Level. It's going to run the whole back-end system. It's where going to be my database of sellers. It's going to be my database of people who are in my funnels for, wanting coaching calls and whatever. It's a like business in a box. It's an amazing piece of software. So I don't need Pipedrive. I don't need Close. All of this is going to happen in something called Go High Level, which is like $100 a month. And then I'm going to use automate personal subject lines and first line for cold emails. Honestly, make phone calls. I'll probably just be making phone calls because how hard is it to call a seller and say, hey, I'm interested in buying your building. I don't need a lot of information. I'm not going to make a lowball offer. Do you have any interest in starting a conversation about potentially selling? You talk to enough building owners, some of them are going to say yes, because some of them are at a point in their life where like the guy who owned the building that I bought, he's older. He didn't want to run it anymore. He didn't want to fix it. He didn't want to improve it. He didn't want to do anything, but he loved the idea of getting a big check. So he's like, yeah, let's do it. So deliverables, 1,000 properties enriched, at least 500 with contact info. Again, you can get AI to show you exactly how to do that. And then you just follow this flow here. Great. Cool. That's week 2. Week 3, outreach automation launch. So I'm going to put all those contacts that I've enriched into Go High Level. I'm going to create an email campaign. That campaign will also have phone call follow-up steps. I'm going to start using, I use LinkedIn a lot. I make a lot of posts on LinkedIn. That's going to generate inbound leads at some point in time. And I don't know if it's going to generate leads from sellers, but these sellers that I've identified, a lot of them are going to be on LinkedIn. And so I can use AI to write them personalized messages. I can have it delivered by software, or I can just have my virtual assistant who lives in the Philippines and I pay her like $6 an hour. She could literally do all of this manually for me. Another mindset shift, you don't have to do all this stuff yourself. The important thing is building the systems that allow other people to do the legwork for you. And for example, like I'll tell you a story about how I did that. Years ago, I had a business on Amazon where we were a reseller of existing products made by other companies. And we identified, so we had a way, I built systems to figure out who these companies are, to figure out which of their products should be selling better, then to figure out who in that company we needed to talk to, then to reach out to the person at that company in the attempt to book an appointment so that we could make our pitch about becoming a reseller for their product. All of that legwork was done by VAs following the systems that I built. We were sending, initially it was like 100 emails a week. Then we were up to 500 emails a week as things got more competitive. None of that was my time. My time was building the systems. And all a system is a detailed set of written instructions. And this is what my software company Flowster is ideal for. And then you literally just bolt people in and say, follow the checklist. And the instructions are so detailed because you've figured out, you've done it manually once yourself. So you know what to do. The instructions are so detailed that there's really no training time. You just literally say, here's the instructions, follow them. So you're going to do LinkedIn connection requests. And this is the goal, 200 to 300 emails a week, 50 LinkedIn connections initiated. And then you're going to track everything in your CRM. So your VA you're going to do number 3, but if you want to employ somebody, and by the way, if you've never thought of hiring a VA before, this is not new. I mean, tons and tons and tons of people do this. And so the girl that I've had VAs for years, this particular one, her name is Des. She's worked with us now for like 7 or 8 years. I'm pretty sure she's $6 or maybe $7 an hour. And she's college educated, speaks perfect English. When we need other VAs, she hires them. Like, she is amazingly good at her job, and I'm paying her $6 an hour. If you what you need to do is understand the value of your time. As the leader, you should not be doing $6 an hour labor. You should be sending that to somebody else. Your job, and my job in this case, is to build these systems so that other people or automation can do the work for me. And all of these things that I build for myself are all going to be made available to my audience, and that will generate more revenue for me, because I'll say, look, do you really want to go figure out how to build an automated deal flow system, or would you just like a copy of mine? What do you think most people are going to say? They're going to say, well, gosh, I'd like a copy of yours. I actually did that when I had my Amazon business. I was on stage. I got invited to speak at this event because my business was so successful. I did not have a product for sale. I was up on stage. I was explaining in great detail for like an hour and a half on how to do all this stuff and how I had VAs do it all and how I developed all these workflows and SOPs. And when I got off stage, I got mobbed by people. Literally just like everyone saying, can I buy a copy? Can I buy a copy? And so we turned it into a product. And over the next 2 years, we sold $2.5 million worth of that digital product. So the guy that organized the conference, he took half the money and I took half the money. So it was incredibly profitable to turn my intellectual property into something that could be sold to other people. And so I'm going to do exactly that. I call it a playbook. It's just a set of highly detailed documentation, system, software, and so forth to allow other people to not have to recreate the wheel, because they understand that in the case of my other product, it was $2,500, that it was a way better deal to spend $2,500 to get a turnkey system than it ever was to go and try and figure it out on their own and spend weeks or possibly months doing that. So now in week number 4, we've got first owner conversations, call or Zoom. So that's a great way to screen people in the beginning. AI tasks, use ChatGPT to generate deal analysis checklists for each asset type. Start rough underwriting, and there's some tools that you can use to do that if you don't have your own spreadsheet. So I'll be checking out those tools because I've never heard of either one of them. And here's our deliverables: 5+ owner conversations in week 4, and then 2 properties worth a deeper underwriting in week 4. That's what I've got to get done. And then we've got week 5, LOI framework and investor warm-up. Build an LOI template. AI will write it for me. Begin a weekly investor update email. I already do that. I already have an email list and I'm building more people onto that list every single day. Create investor intake forms. Those will be on my website. They don't have to be in this case, I'll just use Go High Level to be able to do that. So the deliverables for week number 5 is have my LOI template ready, which AI will write for me in all of 5 minutes. And then 10 plus investors warmed up calls. So again, totally doable. Week 6, first LOI is out. Target properties where you've spoken with the owner and rough underwriting says, hey, this deal has some potential. So now we're going to pick the best of those deals and we're going to issue some LOIs. LOIs are not a contract to buy a building. They are simply a statement of your intent of what you want to do. And when the seller looks at the LOI, if it's to their liking, then they can sign it and you can sign it. And then you can turn it into a contract. You just give it to an attorney or AI and say, turn this into a legal contract. And now you've got a binding contract for purchase and sale. And now you have that building under contract. And then you're going to do your due diligence over a 30 or 60 day period. And there's a whole process for due diligence, which again will be spelled out in more SOPs and workflows, so that by the time you get to the closing table, you understand everything that you could possibly understand as a new buyer. And then you're going to close. Use ChatGPT to prepare a property pitch deck for investors once the LOI is accepted. So if you need to work with investors, that's what I'm going to do there. And so deliverables are 2 LOIs and an investor list of 15 to 20 names. I mean, if you don't know in your town, if you can't develop an investor list of 15 to 20 names, you're just not working hard enough, because it's not that hard to do. You go out and you just talk to people. You have coffees with people. You say, this is what I'm working on. This is what these deals look like. This is what the rate of returns look like. This is what the timeline is going to look like. Does that fit with something that you would put $50,000 or $100,000 into? And people are going to say yes, because people love to invest in real estate. And they especially like to do it on a passive basis where if you got doctors, lawyers, high income earners, they don't have any free time, they don't have knowledge. They're going to say yes. And they're going to be way less sophisticated than you are. So when you're doing all this stuff, if you do a good job, you're going to look like a freaking expert. So week 7, follow-ups and more LOIs. So re-engage all my warm leads, send 2 more LOIs if possible, keep my weekly newsletter going. And so now we got deliverables of 4 LOIs and 1 serious negotiation in play. Week number 8, due diligence prep. So we're going to line up a third-party inspector, an environmental report, and an appraiser. So you're going to have to spend, when you're in due diligence, expect to spend some money. But the thing is, you're not going to go into due diligence unless you've already underwritten the deal. Underwriting is just a fancy way of saying, what do the numbers look like? And so you've already got your LOI accepted. You've already done your underwriting. The seller is going to be agreeable to the terms that you've outlined in your LOI. So at that point in time, it's worth spending. It's worth putting some cash on the line. And this is not tens of thousands of dollars. I don't know how much this was cost, but I would ask AI how much it's going to cost, and it'll give me a pretty good idea. And then you're going to put together, I'm going to put together a data room for the investors that I'm talking to. And so there's my deliverables. And then week number 9, negotiate PSA terms. That's purchase and sale agreement. So now when you go into due diligence, you're going to find stuff. You're going to find stuff that's wrong. You're going to find deferred maintenance. You're going to find stuff that makes you want to pay less for that building, more than likely. So that's when the negotiation starts happening with the seller. You're going to be like, well, hey man, your roof's shot, or the fire suppression system is garbage and it's going to cost $50,000 to fix. I need you to take $50,000 off the price. And more than likely, the seller of the building is going to be like, well, that's kind of realistic. I knew the fire suppression system was on its way out. And so it's not an unreal ask. Okay, so I'm going to give you a concession in the amount of the money that it's going to take to fix the fire suppression system, because I didn't tell you it was kind of on its last legs anyway. So this is normal stuff. This happens all the time. So your draft is going to go back and forth between your lawyers and their lawyers. You're going to get your investor capital commitments verbalized. And then week 10, you got to lock in the money. So you're going to host a webinar. You're going to talk either, webinar to talk to everybody at one time, or you're just going to have more coffees with people with your pitch deck, and you're going to walk them through it. And then you're going to get soft commits. You're going to get people say, yeah, I've got the money. This is a deal for me. And then you're going to be able to get to a point where you've got soft commits for enough of the money. Now, if you don't get there and you can't close, well, guess what? Then you just can't close. And what you've lost is any money that you spent appear on possible attorneys, third-party inspectors, environmental reports. So some capital is going to be at risk, but no risk, no reward. Week number 11, final due diligence and PSA execution. So you're going to walk the property with your inspector. You're going to review the leases and confirm rent roll. You're going to resolve final, or not you, this is all the stuff I got to get done. And now due diligence is underway. Week number 12, we've got it under contract. We're starting the closing checklist. And this is where your brokers are going to really be incredibly helpful because they've done this a whole bunch of times. So you don't really have to figure all this stuff out on your own. Because in all likelihood, there's going to be a broker involved in the deal. So your deal's under contract and you've got a closing date set. And after that, you close. So what makes this achievable in 12 weeks? Parallel tracks. You're building your investor base while sourcing deals. No waiting for one to finish before starting another. You can do it at the same time. The leveraging AI is going to save me boatloads of time. And you're not waiting for the perfect deal. You're going to submit offers, multiple offers to increase your odds. So that's pretty cool. That's a really great action plan, don't you think? And if you thought that was good, leave me a comment in the comment section, please. Now, AI, is saying, if you want, I can design your 1 to 3 week AI stack and exact workflows. So by the end of week 3, you've contacted 500 owners without a manual slog. Well, that sounds like a good deal. So let's just say, yes, I want that. Thank you very much. Let's see what that looks like. How are we doing for time here anyway? Okay, we're good. So there it is, just that quick, as quick as you can type it in. The AI stack, data sourcing, backup, data enrichment, outreach copy, automation and sending, CRM tracking, like it's all right there. Workflow by week, build the target list. There's the buy box. So asset, light industrial self-storage, price 1 to 3 million, location 4 to 5 hours of Boise, size 10 to 30,000 square feet, self-storage 150 to 500 units, mobile home parks 30 to 120 pads. This is really what a buy box is, by the way. And so when you go talk to a broker, this is the number one mistake people make when they go talk to a broker. Hey broker, I want to make an investment in commercial real estate. What do you want to buy? Oh, anything where the numbers make sense. They are never going to call you because you have no idea what you want to buy. But if you say, here's my buy box, if it fits in this, I'm going to be super interested. And you follow up with them every single week via a phone call or an email or a coffee to say, hey, have you had anything come into my buy box? You're going to remain top of mind for those brokers. And over time, you're going to build that relationship as a buyer they can trust. So we've got week number 2, and then we've got week number 3, launch, scale, and outreach. And then we got end of 3-week deliverables. So there's really no limit to how you can use AI to really help you knock it out of the park and get really refined on what you need to do. And then all you need to do is execute. Now, if you're not willing to execute, you're not willing to allocate your time, well, then, there's no help for you. But if you want this bad enough, this is something that you could do and eventually replace your job and then not have to have one. Like I haven't had a job other than the brief stint as an airline pilot until I got my cancer diagnosis. I haven't had a job in 30 years because I do this stuff. I'm willing to hustle. And my life is way better for it because I don't have a boss I have to report to. I don't have a schedule that I have to report to. So there you go. Let's look at me. Hi, everybody. I hope you enjoyed that. It's a lot of fun for me to do. We're going to be doing these live streams every single week. I'm going to allow you guys to really just watch over my shoulder as I build this. And the hopes is, just like flying, that I inspire you, that I educate you to be able to watch me do it, replicate what I'm doing, and do it on your own. And if you need help, if you need guidance, you need consulting, there'll be ways that you can hire me to do that. I'll have products for sale. I'll have probably masterminds or cohorts and consulting calls. So you won't be on your own. And we'll get it done together because I guarantee you over the next year, I'm going to buy a building or maybe 2 because all I'm going to do is follow the plans that I've shared with you. I'm just going to execute. And that's one of my talents is when I make a plan, I'm good at following through on it. So I think let me see if there's any more questions. Chris, this is gold. Cool. Let me see what else. I'd love to know how to find contacts and set up a fund for a deal. Breaking down each step in your investment process would help tremendously. Absolutely all videos for that, Chris. And you know how I'm going to figure that out? AI. Because I don't know all the details of that stuff yet. Somebody said audio is glitching. Don't know why that is. Hopefully it wasn't glitching too much. Brandon, love it. Thanks for taking the time. I think I read that one already. I did. So I really want to thank you guys for being here for the very first live stream. It was supposed to be on the Invest with Trent channel, but for whatever reason, YouTube was not letting me live stream on that channel. So I had to put it on the Fly with Trent channel. I am going to chop these videos up, what we talked about today, into some videos that can be rewatched at your leisure. So don't worry if you're like, hey, I really want to watch that stuff again. It's going to be coming available for you in the next probably week, I would guess. I'll give this file to my editor and he'll chop it up and do the edits and all the things that he does so wonderful for me. So I think we will, I forgot to sit water on my desk and I'm completely parched because I've been talking for an hour and 5 minutes. I think we'll wrap it up here. Thank you so much, guys, for those of you who are in the pilot niche who've done such an incredible job of supporting me in the Fly with Trent channel over the last couple of years. It's been truly transformational. And for those of you who are just joining me for the real estate journey, well, you're in for some fun because I love this stuff. And this is going to be my huge focus, in addition to keeping the Fly with Trent channel going, of course, because that doesn't take me more than a half day per week. And all of the rest of my time is going to be put into this, building this real estate business. So we will see you on a live stream again. Exactly. DIY now need to take a step forward. Exactly. What's the first step? Go on AI and ask for a plan. Anyway, there's going to be weekly live streams. There's going to be videos. There's going to be the email newsletter. If you're not yet on the Invest with Trent email newsletter, I highly recommend you go to investwithtrent.com and just put in your name and your email address. And that way you won't miss anything. And also please do subscribe to the channel. If you could all just go to the investwithtrent.com website. There's a YouTube icon up in the header. Click it. It'll take you to the channel. And your big thanks for me today is just click and become a subscriber, because more subscribers is much better. It helps the channel to grow. It increases credibility. And that is just like a snowball effect. So you guys rock. I hope you had fun, and we'll see you again soon. Take care, everybody. Bye.